What is going on, investors? Hopefully guys are doing well out there. That is right. It is Friday. The weekend is here. And that also means it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks, including earnings this week from Netflix and Tesla. And all of these companies outside of NVIDIA actually report their earnings early next week, including the stock we always kick things off with Meta Platforms. This stock started the week at $131.65, ended the week at $128.29. This company reports their earnings on Wednesday, the 26th. Now, unfortunately, I will be traveling that day. I will likely not get the Meta video up that day. It'll come the following morning, but if you've been following this channel for any length of time, you know exactly what to look for when it comes to Meta. We're focusing on those revenue numbers. Revenue estimates for the quarter expected to be right around $27.5 billion. Anything north of that, especially anything close to much closer to $30 billion, $29-30 billion would be a huge surprise for Meta, probably send the stock much higher. You also have Q4 guidance that will likely come from Meta unless they pull that off the table like Snapchat did yesterday. Well, we're expecting $32.35 billion worth of revenue in Q4. Anything higher than that, especially towards the high end of the estimates, closer to $34 billion, will be incredibly bullish for Meta. Very much looking forward to see how those earnings turn out again on Wednesday, the 26th for Meta. Now, Snapchat reported their earnings yesterday. We did a video here on the channel. The stock plunged 28% after their Q3 sales were just a complete disaster. And then they said that they pulled Q4 guidance. They weren't going to give any. But then when you dug into a report, you actually saw that they're expecting their Q4 to actually be flat year over year. When you look at Meta, they're actually looking to decline year over year on that Q4. And these Q3 numbers, which are expected on Wednesday, also expected to decline by Meta. I tell you what, if Meta can be flat year over year for Q4, or maybe even a small like 1 or 2% increase, that would actually be a bullish sign for the stock, considering their estimates have come in tremendously. Snapchat did note, though, during the first couple of weeks, we're like 3 weeks into the Q4 quarter for them, they actually said that the ads were actually up 9%, but they're expecting the subsequent 2.5 months to basically be a complete disaster and finish the quarter out, have flat growth year over year. We'll see how Meta performs again on Wednesday, the 26th. Now, Meta Platform says it will have to sell its Jiffy search engine, which is a GIF search engine. I can't believe that regulators are cracking down on memes and GIFs, but they are. Facebook bought this back in 2020 for $400 million. We've talked about it here on the show. The UK took exception to that and said that other social media stocks and other social media sites would not get the GIFs and the memes that you deserve as public. And so now Meta is going to have to divest out of that platform. Now, disappointing data about Meta creates doubt on the metaverse timeline. This according to Loop Ventures' Gene Munster. I couldn't agree more with Mr. Munster, as look, these goggles would be flying off the shelves. You'd have lines, you'd have wait times, just like you see with Teslas, just like you see with other hot products in the past, other iPhone releases in the past. The bottom line is these metaverse, these virtual reality headsets still figure into a niche audience and niche use cases. And I don't think that's going to change anytime soon. I think somebody over at Meta is probably trying to tell that to Mark. And when they tell that to Mark, they get the boot. Moving on to Apple, start of the week at 141, ended up much higher, close to 4%, up to 147. Apple reports their earnings on Thursday, the 27th. We'll have those videos for you on that day. Now, those Q4 numbers expected to be about $88.8 billion. Obviously, there's a little bit of iPhone in those quarters as well. That would be about 6.5% year over year growth. Apple doesn't typically give like very specific guidance, but we should get some verbiage from Tim Cook or maybe another executive about how the iPhone sales are going for that all important Q4, calendar Q4, fiscal quarter Q1 for Apple. Now, Apple, I bet you maybe not have heard about this, but they actually unveiled several new products this week, including an Apple TV 4K with a reduced price. They came out with an Apple iPad Pro with an M2 chip on it. That's got to be a fantastic device. Those are actually pretty expensive. You're looking between $800 and $1,000 for those. So basically what a decent laptop costs. And then you also had new redesigned iPad which came out, which actually starts at a higher price than previous models. This one starts at $449. I think the previous version of that might have been at $399. So they quietly raised the price on the entry-level iPads, and they released a Apple TV 4K and reduced the price on that based off the previous generation. Now, Foxconn says its production at iPhone factory is normal amid the restrictions that you're still seeing in that country. Obviously, any outbreak or any further outbreak of this, more and over and above where we're at today, certainly will impact all of these companies. Now, Apple earlier in the week erased some gains as it reportedly cut its iPhone 14 Plus production just shortly after the debut. And so look, every other day we're getting reports out of Apple and their production numbers in their iPhones. Sometimes it's saying, hey, it's going well. Sometimes it's saying it's cutting. I tell you what, we'll just wait until Thursday the 27th to get a clear view from the company. Now, Apple announced that Fitness Plus is coming to iPhone starting next week. This was previously only offered to people that had the watch. And so now you're going to be able to get that Fitness Plus subscription plan, which is a $9.99 month per plan. I think you can also roll it up into Apple One, maybe a $30 subscription plan. You get access to certain fitness products from Apple. Now, Taiwan Semiconductor, which obviously supplies chips to basically everybody, including Apple, considers expansion into Japan as those geopolitical risks rise. I would applaud this, and I hope they break ground on that pretty quickly. In Japan, it would diversify Taiwan Semi and probably make that stock more investable than it already is. If you missed, I think last week we posted our TSM video. I tell you what, that's one of the few companies that I really, really like from a financial perspective, but I don't own because you have a fair amount of risk associated with that. Now, Apple, this was an interesting story. I didn't see this on many investing sites, so I had to pick it off an Apple website that they say that Apple may want more Sunday ticket flexibility than the NFL will give. Apple wants to be able to stream this maybe overseas, and they want to do more with the NFL Sunday ticket than what the NFL is willing to give up. Now, the NFL is used to TV partners basically bowing down to them and basically doing whatever they want. Apple probably feels like it's in the driver's seat because it's basically bidding against itself. Now, obviously, I think Amazon probably could bid for this. Certainly, Google is certainly a viable competitor as well. From just a straight cash on the balance sheet perspective, Apple and Google could easily afford the Sunday ticket, but this was all considered basically a done deal. We were actually expecting an announcement on this any day now, but it looks like the negotiations are still going on, and we don't have any clear picture of where that Sunday ticket will land sometime next year. Again, I believe probably Apple, Amazon, and Google are the front runners for that. Moving on to Amazon, started the week at 111, and it bounced off that level like a basketball, up over 7% this week, up to $119 per share. Amazon reports their earnings the same day as Apple on Thursday the 27th. That'll be a busy day here on the channel. Now, Amazon expecting $127.6 billion worth of revenue in that third quarter. That would represent still 15% growth on this. That included Prime Day, I believe. Inside that quarter, we'll potentially get some Q4 guidance as well, not necessarily a revenue number. Wall Street expecting close to $155 billion worth of revenue. That would again be about 13% growth. Essentially what I'm seeing here from Wall Street is a mid-teens grower out into infinity for Amazon. Any deviation lower than that, and this stock will almost assuredly retest $100 per share. Anything meaningfully above 15% growth. And then certainly when you look at that EPS, which can really vary with Amazon depending on how much cost cutting they were able to execute in the quarter, how much profits they were able to actually squeeze out, how their investments panned out over the quarter. Well, all of a sudden you have a greater than expected profit number and decent growth. Well, this company probably could continue to rise. Now, Amazon is bracing though for a $1 billion class action lawsuit focused on the buyback. So when you're on Amazon and you're about to check out and you're clicking that buy it now or click to add the cart, oftentimes you're actually adding a product that is not the lowest priced there on the side. I know this from experience as I sell on Amazon. Oftentimes, if I am shipping that item, like I have some space here where I store a small amount of inventory, usually it's fragile inventory I don't feel like sending into Amazon, and I am shipping and packing those items myself. If there's another person selling that item and they're using Amazon's fulfillment centers, and maybe they're even buying ads from Amazon, or maybe even Amazon is the first party seller of that good, I need to be several dollars underneath their price. Just matching their price or being under their price by $1 or $2 still doesn't give me the right to that buy box. So the user would actually have to click through and find my item and add it to cart. It's a much more complicated situation. I believe Amazon is guilty of something. I think they could switch their UI, add a little bit of tab, or add a little bit of clarity to this. Whether or not they have to fork over $1 billion, I doubt it. But this case filed by a UK law firm probably has some legs, in my opinion. Now, Amazon is starting to offer home insurance in the UK with a new online store. They're partnering with other local issuers, and you're going to be able to buy different types of insurance on Amazon. That is an interesting business model. We'll see if it comes to the United States. Now, Amazon workers in Albany, New York voted against unionization, and it wasn't really that close. And so Amazon is doing their part in doing their job in, at least to a certain degree, deterring some fulfillment centers from forming unions. Whatever they did in Albany will probably be applied to other unionization efforts across Amazon's warehouses. Now, Amazon Web Services, AWS, to invest $5 billion in Thailand cloud infrastructure. So they're going to do a multi-year investment there, maybe corner the market or get a large share of Thailand's cloud business over the next few years. Moving on to Netflix. If I tell you what, if the other FAANG stocks do pull a Netflix, well, things are looking pretty good for most of these stocks next week, as this stock started the week at $237, up just 21% to $289. This stock just continues to rip. That's after the company announced big subscriber growth. I'll have links to the Netflix and the Tesla earnings videos that we did earlier this week, so I won't have to go much in depth over those numbers. Most of you are aware by now that the subscriber growth was good. Now, what was interesting is Reed Hastings, the CEO, co-CEO of Netflix, he said on the earnings call that he's thankful that the subscriber shrinking, quote unquote, is over. But what's interesting is the company is actually going to pull that subscriber number. It used to be something that they guided to and that they reported. Well, they're going to do a less granular effort on that, and they're going to focus more on that top line revenue, which that top line revenue we've been talking about for months here on the channel is going to look really good when the Apples and the Starbucks and the Nikes and the McDonald's start advertising on Netflix. You are likely to have tens of millions of dollars flow to that top line, which is different than Netflix's previous business model where they were just collecting $8.99, $9.99 per customer per month. Now you're going to have much more money coming through the door. And so they're going to try to focus the attention of investors on that top line revenue number. Now, Netflix also, what I like about Netflix right now is they're innovating. Okay. Whether or not it works out, I don't know, but they are innovating. Okay. They're obviously investing in their content, but they're also innovating with that ad platform, but they're also setting up a profile transfer. So if you're bum hunting your mom's Netflix account, or like I tell you what, half of my family uses all my subscriptions. If they wanted to transfer to their own paid subscription, they'll be able to take their profile from, say, my Netflix passwords, and then they'll be able to transfer it over to there. So it saves their watch history and suggestions and those types of things. Moving on to NVIDIA, started the week at 118. This one also up nicely, up nearly over 5.5%. End of the week closer to, I'm seeing in the after hours, at $125 per share. This is after the company unlaunched their 12 gigabyte 4080 chips. Just a couple of weeks ago, the company announced their new 4000 series graphics card. And inside there was a 4080 chip. One had 12 gigabytes of RAM and one had 16 gigabytes. But when the testers and the people that are very serious about these graphic cards, when they dug into it, they realized that this 12 gigabyte model that they decided to, quote, unlaunch was actually a completely different graphics card. It wasn't that it just had 4 less gigabytes of RAM. It had less cores. It was basically an inferior product. And so the company acknowledged that it was not named correctly, and they took it out of the lineup. Moving on to Google, start of the week at $100 per share, and the week basically flat to 101. Google reports their earnings on Tuesday, the 25th. In terms of what you're looking for with Google earnings, you're expecting about 8% revenue growth, up to about $70 billion on the high-end estimates. The estimate actually is pretty wide here. The high-end estimate is for $73 billion, but the low end is all the way down to $66 billion. Tell you what, if Google hits that $66 billion number, it's probably not going to be good for the stock. Maybe we get guidance for the Q4, but you're expected about $79 billion, almost $80 billion worth of revenue for that Q4. Anything in this region will at least be neutral for the stock. Anything slightly, I think, at these numbers, I tell you what, if they meet these numbers, because again, there's some people on Wall Street expecting closer to $66 billion worth of revenue. If they come in at $71 billion worth of revenue, there's going to be some investors that are actually relatively pleased by that. Anywhere in that kind of low to high single digit growth rate on that revenue side, investors are probably going to be pleased when it comes to Google. Now, Google is boosting their device production. This is the phones and the Android devices, as Apple keeps taking market share from Samsung. Found this kind of interesting, obviously more bearish for Samsung than it is Google, but obviously Google operates its Android operating services, and inside of Android, they're funneling you to Google, they're funneling you to YouTube, they're funneling you all to Google services. So the Android operating system, while maybe not showing up from a financial perspective, does funnel you into the ads and services that Google has. Also, it allows Google to control that ecosystem, because obviously Meta and Snapchat, one of the major reasons why their earnings and their profits are down year over year is the fact that Apple made changes to their ecosystem that didn't allow you to track ads. Obviously, if Google has control of the ecosystem, they're not going to do anything knee-jerk reaction wise that will hurt their core business, which is still online advertising. Obviously, Google still makes plenty of money off of Apple, as they pay them a large amount of money to be the default search engine for those devices. Now, Google is in talks to invest $200 million in an AI startup called Cohere. This company does things like build tools for chatbots and other features capable of understanding speech and text. NVIDIA also seen as maybe a potential investor as well. Texas sued Google over biometric data collection. So they're alleging in Texas that Google grabbed millions of identifiers, including your voice prints and your face geometry, maybe even your fingerprints, as ways to maybe have you unlock your phone or maybe inside your Google Photos. And they did that without your permission. So Google might get a slap on the wrist there. Speaking of slaps on the wrist, Google was ordered to pay a $162 million fine by an Indian antitrust agency. Again, this all revolves around the fact that Google leverages their dominant position in Android to funnel you into YouTube, Chrome, and other app stores that are controlled almost exclusively by Google. Now, Google replied back saying this is a major setback for consumers and businesses. We wouldn't expect them to say anything less, but they will pay a $162 million fine. And when the company has $70 billion worth of revenue in a quarter, not going to make that much of a difference from a financial perspective. Now, Google's Waymo is going to target Los Angeles as its third self-driving rideshare region. I tell you what, if the cars have to look like this, I don't think there's a lot of future for this. They've got to streamline this down to how like a Tesla looks when it is self-driving, but we'll see what happens. Maybe this is an older stock photo, but driverless rides are available in Phoenix, San Francisco, and soon to be in Los Angeles. Those markets probably need those types of things. Moving on to Microsoft, start of the week at 237. This one actually up pretty nice, up about 2.16%. Microsoft reports their earnings the same day as Google. That'll be a busy day here on the channel. That will be Tuesday, the 25th. What you're expecting from Microsoft is revenues right at about $49.7 billion. That would be about 9% growth, a little over 9% growth. The high-end estimate is at $51 billion. The low end end is at 48.5. Really tight range with Microsoft because they have a lot of subscription business. So it's actually hard for this company to have kind of like that upside surprise quarter, like maybe like an Amazon could potentially have, or maybe even Meta, considering all the negative sentiment around their business model. I guess they could have an upside quarter. Certainly Apple could have an upside quarter as well, but Microsoft tends to keep things in a pretty tight range. For Q2, which is calendar year Q1, for us regular folks, you're expecting about $56 billion worth of revenue. Basically, the next quarter, you're going to be high single-digit growth rate, but you're expected to reaccelerate kind of in that mid-teens heading into next year and the year after. And that is the big question mark on Wall Street. Will these companies be able to reaccelerate their revenue growth into next year? And if they do, these stocks actually are probably a little slightly undervalued. Now, Microsoft laying off 1,000 employees, citing a global shutdown. This was confirmed by employees as well. This is less than 1% of its total workforce. We'll see how these this is what I'm really looking forward to. I don't think we'll see a ton of these cost cuts basically get passed through to net income and operating profits this quarter, because there's always like restructuring and kind of severance cost whenever you cut somebody. But maybe in the subsequent quarters, we'll actually see this. And so certainly that's where your upside is. If the economy doesn't tank as much as kind of the doomer and gloomers think it will, and these companies can reaccelerate to double-digit growth, and then they couple that with the fact they've right-sized their business to a certain degree, well, some really good things financially could be coming into the back half of next year for these companies. Now, an Activision Blizzard block of shares, so 3.7 million of them actually traded. This was earlier in the week on October 17th, so about 4 days ago. This was kind of interesting because you had 3.7 million shares, which is obviously a gigantic stake considering each share cost about $72.25. Somebody was trying to push this through Goldman Sachs, like basically like an accredited investor or a hedge fund or just somebody with a lot of money was trying to get out of this. And sometimes when these big deals go through, it's like, man, what do they know that I don't know? Because you've got a gigantic spread on this one. The deal spread is over $23 per share. We're expecting some kind of news on this one probably as early as next month after the election. I tell you what, my thought was always this deal was going to go through. But if you've got big investors looking to get out of like large blocks of these shares at a significant discount, maybe they know something that I don't know. That's probably a fact. Moving on to Tesla, they reported their earnings earlier in the week. The stock started at $213, basically flat. Okay, it kind of trended up, had this big down day, but recovered pretty nicely. Basically ended the week flat at $214. I picked up some shares on these kind of downward days, south of, I think, 208 on this one. So we'll see what happens. We'll get over to the technical segment. You'll see more evidence of that. Revenue in the most recent quarter for Tesla came in slightly light, but it was still 55% growth. Their earnings were a little bit ahead of expectations. Elon Musk was on that conference call and he was pumping this stock. He initially kind of like casually said that the company would be worth more than Apple and Saudi Aramco combined. He noted that several years ago, he said that Tesla would be worth more than Apple, which I think at the time Apple was worth like $800 billion. Tesla, I believed, achieved over a $1 trillion valuation earlier this year when the stock was much higher. So he basically, stuck his flag in the ground and said that was a success, even though Tesla is now closer to like a $650 billion company. Now he's saying that the company will one day be worth more than Apple and Saudi Aramco, which has got to be, $5 trillion, maybe even $6 trillion. That would be a 10x from where you are today. So I tell you what, if he's able to achieve that, investors will be extremely happy about that. Maybe he's trying to pump the stock because some analysts believe that he still needs another $10 billion to close that Twitter takeover deal, which is expected to close, I believe, next Friday. You can tell there's a lot of scrambling behind the scenes from investment banks and other investors out there to close this deal, and they're clearly overpaying that. That's not me saying that. Elon Musk even said that on the conference call, that he and his group of investors are overpaying for Twitter. My opinion from day one on this is it has almost no impact and has no relevance to Tesla in the longer run. Sure, in the shorter run, Elon Musk has been selling his shares to raise money. If he has to raise another $10 billion, well, the stock is probably going to go down a little bit more. But in the long run, if he does acquire Twitter, he has access to one of the most powerful political tools here in the United States and probably other parts of the world as well. I think that has some value for Twitter shareholders. Also, the marketing. Obviously, he's been using Twitter to kind of market himself and his businesses and Tesla to a certain degree. Obviously, he could continue to do that if he continues to hold a bigger control of Twitter. Now, the Biden administration to award $2.8 billion to boost EV battery manufacturing. That obviously would benefit Tesla if they continue to hand out money to already profitable companies like Tesla. Moving on to the technical segment of the show, we took a look at the S&P 500. We talked about last week. It bounced off this. We actually have 3 levels of support. There was this level at about, we'll just round this off and call it 3,600. It bounced like a basketball there. We're now at 3,750. You really, to actually say that, hey, we've got a really strong rally and the trend is reversed from the beginning of the year, you need to get above like 4,400 on this one. You need to get above the previous highs here because you are just basically confirming lower sets of highs here. Even if you rally up to here to close to 4,200, that would have to happen in the shorter term. If it happened in the longer term, this trend line just continues to go down. You could rally to 4,000 on the S&P 500, and that would be your area to sell. So if you were worried about these markets, if you didn't sell enough shares in the beginning of the year, if you believe rate hikes are just going to continue, if you think we're going to slip, first of all, I think we're already in a recession. These people saying that we're going to be in a recession in 2023, it's like, where you've been. We've been in one all year, in my opinion. Whether or not the technical definition is there, it depends on who you ask. I personally think we are absolutely in a recession here in the United States and around the world. You should get rejected. You still could have a great rally on this one, okay? A rally to 4,000 is another 7% on the S&P 500, but we would expect a subsequent drop, probably retesting the lows we made just a couple of weeks ago. That would be a nice little 14% drop if that materializes. So depending on which way you have an opinion on these markets, these rallies are your chance to sell, or at the very least, maybe take some shorter term profits. If you've been like me and you've been buying over the last couple of weeks, you're sitting on some shorter term gains if you want to realize some of those gains over the next couple of weeks into earnings season. First of all, it looks like earnings season's going pretty well. We'll obviously get the biggest companies reporting next week. It's just my gut feeling that these companies, for the most part, obviously there'll probably be 1 or 2 of them that really lay a brick, but some of these companies I think will probably do relatively well. And so that should keep the market propped up, at least in the shorter term. Moving on to Meta. This one is sitting on an area of resistance. First of all, you're basically at the bottom of the channel. That can be a buying opportunity. You also have this 127, 128. We'll just round it up to 130. Why not? That is an area of support. It's been an area of support for the stock, not a firm area of support, not a very well-tested area of support, but it is. I did step in on Meta, just a very small amount. If earnings weren't next week, it'd probably been a larger position, but I am basically, I hate to use the word gamble, but I am taking a shot on Meta, and maybe they're able to meet expectations and then you get a nice rally, because I tell you what, if you can move from where the stock is right now, even to the halfway middle of this range, the middle of this downtrend that we're in, that would be a 9% move. If you move to the top of the range in short order, that would be a 15% move. I love making 9% to 15% on my money in a short period of time. We'll see what happens there. Moving on to Apple. This one bounced off a level of support down here at about 136. It's up here at 147. You do have overhead resistance, not a firm area of overhead resistance, but you do have some overhead resistance at 149. A break above 149 really increases your odds at maybe retesting these highs up here at 175. It would have to take a heck of an earnings report on Thursday from Apple to really move through that in one day or in a week. But anywhere close to that 160, 170, just keep in mind, just like the S&P 500, you are making lower highs here. And the highest probability thing happening is you come to another set of lower highs and then just simply reverse and maybe backtest down here. But what we could be eventually creating with Apple is some kind of uptrend that'll look like that, where you created some lows back here in June, a high back here in August, but a higher set of lows here in October. Eventually, you're looking to push up over the 175 range until you get over 175. The downtrend in Apple and quite frankly, the market is still intact. Amazon's still in this downward trend. It is setting up at the top of the trend mark. So a bad report will, I think, almost guarantee take you back down here to the lows at 100, depending on the nature of the report and the reason for the bad report. Again, Amazon reports their earnings on Thursday, the 27th, the same day as Apple. A bad report, bad guidance, bad profit, bad conference call, whatever it might be. Yeah, I could absolutely see the stock getting rejected and pulling down here into south of $100. That would be a nice area. It wouldn't necessarily jump in that first day because the momentum would be very clear with this stock, but I think you could accumulate that stock over the next couple of months in that area. The reverse, if you get a really bullish report, bullish earnings, bullish outlook, well, you're probably going to break above, but you need to get above 145 on this one. The stock on the last earnings call gapped up to 145. We talked about it extensively here on the show and even probably on that earnings video as well, that it was going to meet resistance there and pull back. That's exactly what it did. Wouldn't surprise me if that's what happens when you have a good earnings report from Amazon. It pops to 145. It really would take some solid momentum to get above that. And until Amazon is able to get above 145, the downtrend, at least in the shorter term, is still intact. Now, this is not a downtrend. This is a rocket ship higher. Oh my gosh, we're filling this gap as fast as we possibly can. We talked about it here many times on the show. Once you got above 245, 250 on Netflix, it was going to cut through this gap like a hot knife through butter because there just wasn't a lot of price action in between about 250 all the way up to 340. It's actually surprising me that it continues to push higher. This is a very steep uptrend on this stock. I don't need to tell anybody that. I think we have some kind of pullback and a retest to the 250 region. You get a retest to the 250 region on Netflix. That can be a buying opportunity. The other thing you could do is just play the momentum, have a very tight stop loss somewhere here at like 280 and just keep playing the run up. That's not a trade I like. That's not a setup that I am really comfortable with or one that I execute a lot, but I do know some traders that like these kind of breakout and just continue to run. Your resistance level is going to be clear with Netflix. The time to sell, absolutely. In fact, I would front run this. Is up here at about $333 per share. The stock should absolutely meet some resistance up there, but that's still like $40 higher. Now, speaking of selling, NVIDIA is at the top of the range. This company, unlike the rest of these, does not report earnings for another several weeks. You're looking at earnings at November 16th on this company. So you got several weeks here. It was down towards the bottom of the channel a week ago. That was your opportunity if you want to play these kind of channel pops. It's to the top of the channel. I would expect this stock to meet some resistance here at 128. That is a hard level of resistance that was in place back here in the 20 and 2021 region. You're coinciding that with your downward channel. This should be a pretty firm area of resistance. I would expect next week or the following week, NVIDIA to pull back, probably retesting the lows that this stock made down at 108. I'm still projecting this stock to go south of $100, maybe in the shorter term, maybe in the longer term. A bullish move, if I'm wrong, should take you really quickly back up into the 150s on this one. We'll see what materializes with that. Obviously, bullish reports out of the other tech stocks could just push NVIDIA up right with it. Moving on to Google. This one's just hovering at this red line here at this level of support. It broke down below. I've accumulated the stock a little bit down here. I was pretty aggressive actually once it got down here south of 100. I talked about that for several weeks on the show. I started buying it up here at, I believe, 110-ish, and then it broke. I was wrong. It broke, and I was even more aggressive buying it here. It's obviously making me a little bit nervous because we've got earnings from Google on the 25th, a bearish report, bearish guidance, bearish news should take you to the bottom of the channel, which should take you south of $90 on this one. I would likely just continue to buy it there. A bullish report, I don't think takes you much higher than 110 on this one. If it does get above 110, you really need to get above about 118, 120 on this one to really break out of this trend and to really show that maybe you're more in kind of a sideways consolidation chop with Google. We'll see what materializes next week with that one. Moving on to Microsoft. This one, similar to NVIDIA, is actually setting up more or less at the top of a channel. So you see here, this is where the stock is setting up. Last week, it was down here at 220. I did pick up some shares down there. I'm buying this on the way down on the bottom of the channel. I'm buying this one. I bought Meta this week, bottom of the channel. I've been buying Google, not quite at the bottom of the channel, but it's pretty close. And I did the same thing with Microsoft's bottom of the channel. A bullish report next week. Again, this company reports their earnings on Tuesday, the 25th. A bullish report should take you out of this channel. That can be your shorter term selling opportunity. If you were like me and you bought it down here and you want to sell, go ahead, because this stock, to really do something different, you actually need to get almost to $300 per share, okay? Because the trend line I have in here is a condensed one. Really, the trend is more probably like this. So you really need to get well up and above these highs or really close to them to show that this downward trend line, this kind of red line that we have here, is all of a sudden over. Kind of the lower highs, lower lows is over. I don't think we get confirmation of that next week, but a good report could shoot this stock significantly higher. Now, finally, Tesla. This one we've talked about for like over a year and a half on the show. Bases around this $200 level. Obviously, that dollar figure has adjusted based on the split adjusted price that we're looking at, since Tesla has split almost twice over that period of time. I said several weeks ago here on the channel, when the stock was trading at the top of this channel, I said, hey, I think it gets rejected here, and I think it comes to the bottom of the channel, and I was going to buy it. Now that it's at the bottom of the channel, this is why you make these plans, and this is why you execute on this plan. Because I bought Tesla today. I think I bought 5 shares of Tesla today, and it made me sick to my stomach, because I tell you what, this stock is a stone's throw away from breaking this 210 level and coming down to probably like 150 in short order. We're talking about probably over the matter of days. But the reason why I felt comfortable with that was, number one, we had a plan already in place when the stock was higher. We said it's going to get rejected here, going to come down here, we're going to buy it. And we went through the earnings report with Tesla, which I thought was stellar given the backdrop, given the circumstances, given the interest rates, given the supply chain issues. I thought Tesla's report was fairly good. And while I'm not going to like agree totally with Elon Musk, I think he has the potential here to get easily back to a $1 trillion valuation on this one. That would be another, 30% higher on this stock, when the average return from the S&P 500 is 10% a year. And you got one stock that could potentially do 30% over a short period of time. That's a winning investment in my eyes. Hopefully you guys enjoyed today's video. We'll be back again, obviously, next week with lots of videos. Stay tuned to the channel. Hit that like button and subscribe if you haven't already. We'll see you again soon. Good luck with your investments.